All right, Dan, this is the weekly coffee chart. I'm going to give you a couple of weeks of data here. Um, the first thing I'm going to point out, if you can see my cursor, is we've got this channel structure here that we settled above about 4 weeks ago during this big blast. And then we got to the top of this channel, which is the more meaningful one, really. This channel at 105.27 this week. And let me put a X hairs here. You can see this yellow, it's at 105.27. That's this week. Next week, the week of the 24th, it's at 104.69. So this is your resistance through July, really, and maybe even through summer trade, through the third quarter, let's say, that can absorb, let's just call it monthly buying pressures when tested. This is the area you really want to see the market settle above over the next, say, 2 to 3, 3 to 5 weeks, depending if we retest it again, for bullish continuation over the following. It could be as little as 2 to 3 weeks if we have this kind of volatility. It could be a full month or two where we reach into this area. So closing above 105.27 this week or 104.69 next week would indicate several weeks bullish continuation into this 117.55 area, which is this week. Next week it'll be 117.32. The following week 117.09. You can just call it 117 handle resistance. And by the way, this is the lead contract, whatever the high volume contract is. This is the weekly continuation chart based on volume. I'm not sure offhand which contract that is, but I know that you know. 96.65 last. So got to get above 105 handle resistance to reach into the 117 handle. Until then, this market, having almost really tested this channel top, is susceptible to slipping back not only to the lows at 88.75 settlement price from last May, but possibly even new lows. And in fact, let me go ahead and create a new chart as to what that might look like if we settled below that 88.75. You've got a channel structure here that's dropping. That's an extreme version. But really, I almost want to 83.35. That's really what's vulnerable right now. Holding below 105.27 does allow this channel base at 83.35, I'm going to say, into August trade, depending on volatility, of course. Now you do have several support levels on the way down that are respectable. This week at 95.44, which drops next week to 94.86. This is a base of support that actually can hold June selling pressures into July. And once we test this, what I like about it is consistent with these highs as well. Holding above it does allow this 105.27. So if you are long this market, holding above 95.44 and 94.86 next week does allow another test of this 105.27 formation. But if we close below 95.44 this week or 94.86 next week, not only should you see a retest of this 88.75 low settlement price from May, but I think overall, if we close below 95.44 formation, this is what you should prepare for. It would be new lows to this channel base, which, in my opinion, can absorb quarterly, say 2 to 3 month lows when tested. If you're long, you want to see a settlement above 105.27 at the end of this week. Not going to happen. Or 104.69 by the end of next week, in which case you're going to get to the 117 handle, which is a significant resistance area that could contain buying through the balance of the year. And that's really all I've got to say. I'm gonna leave you with this market is bearish into later summer below 105.27, and sets off secondary selling pressures with a settlement this week below 95.44. You want to see a settlement above 105.27, which should then yield 117.55 within a month or two. And that's all I've got to say.